Welcome back to Quantreef. Bitcoin's trading right at 63,147, sitting almost exactly on session VWAP and tucked inside the 786 fib retracement from the last daily swing. That's a tight, compressed spot to be watching. Today we'll walk through liquidity, support and resistance, VWAP, Fibonacci, fair value gaps, positioning, and where this likely goes over the next several hours. Let's get into it. Structurally, this still reads constructive. The trend and structure layer scores 77.6, the highest reading on the board, telling you the broader swing structure hasn't broken down. But zoom into the last few hours and order flow and volatility scores drop into the 44 to 47 range. That's the chop. Price has been pinned under the 63-68 pivot, unable to close through it, which tells you sellers are still capping every push higher even as buyers keep defending the fib floor underneath. Session VWAP sits at 63.269, almost identical to that pivot, and price is trading just under it, meaning the session's value is still marginally below fair, a mild edge to sellers on the intraday auction. Both anchored VWAPs, taken from the recent swing high and low, sit up near 64.360 to 64.620, well above spot. Staying under both anchors tells you the market hasn't reclaimed the value built during that last leg higher. The liquidation map shows two big walls almost equidistant from price. Upside sits at 63.690, less than 1% away, holding roughly 1.36 billion in resting size. Downside sits at 62.176, about 1.5% away, holding close to 1.4 billion. It's basically a coin flip, 51% weighting to the downside pool versus 49% on top. Markets tend to drift toward the fatter, closer pool to clear out stops before committing to a real move, so don't be shocked if either side gets tapped first. Nearest resistance sits almost on top of us at 63.147 on the 4-hour, then 63.672 above that. Nearest support comes in at 62.972 on the daily, backed by 62.707 on the 4-hour. Structure strength here is rated low and stop hunt risk high, so expect wicks through both levels before anything sticks. A clean loss of 62.707 is the one that really shifts this bearish. There's a bull gap just below current price, between 62.867 and 63 for 15, and it's almost fully filled already, so that support's largely done its job. Above us sit three unfilled bear gaps, the closest around 63.230 to 63 for 15 carrying a 93% historical revisit rate, then two more stacked towards 64.012 and 64 for 97. Those upper gaps are the more obvious magnets if price manages to push higher. We're inside the retracement of the swing running from 66.937 down to 61.777. And price is sitting right on the 786 level near 62.882, less than 0.5% away. The 618 at 63.749 is the next fib resistance overhead. Clear that and the extension targets up near 68.341 and beyond come into the conversation, but that's a story for later. The layered scores tell a mixed story. Trend and structure at 77.6 and volume at 86.6 both lean bullish, institutional positioning at 65.8 and behavioral sentiment at 71.6 agree. But order flow and liquidity sits at 47, statistical volatility at 44.8, and macro regime is dead neutral at 50. That gap between a strong structural, volume and sentiment picture against a weak short-term flow and volatility red is exactly why the overall grade comes out neutral, with an end score of 63.2 and readiness at 84.6, close, but not a clean signal yet. Retail's running about 66% long, and top accounts are similar at 66.5%, with top trader position size at 61.4. Everyone's leaning the same way on paper. But look at 4-hour volume, short flow at 2.3 billion actually outpaces long flow at 1.7 billion. That mismatch is exactly where squeeze risk builds, most likely a short squeeze if price pushes back up through resistance. Putting it together, price is squeezed between two liquidity pools of nearly equal size. Given the slight downside weighting and the fact the fib and daily support sit just below, I'd lean toward a sweep of 62,176 first, tagging that support and the 786 fib on the way down. If buyers step in there, the bounce likely runs back towards 63,690 and that stack of bear fair value gaps above. If sellers instead take control and 62,707 fails to hold, the 61,777 swing low comes into view. The alternative is a direct push higher first, reclaiming VWAP and running the upside pool before any downside test happens at all. Bullish case needs a reclaim and hold above session VWAP and the 63,147 to 63,672 resistance band, confirming buyers are back in control, invalidated on a clean close back under 62,707. Bearish case is a rejection right here under VWAP and the pivot, with a break of 62,972 opening the 62,176 pool, invalidated if price reclaims and holds VWAP. Either way, risk gets framed around those support and resistance boundaries, not a guess at direction. So we're sitting right at a decision point, and whichever side actually clears its liquidity pool first likely sets the tone for the next stretch. If this kind of layered read is useful, drop a like and subscribe. Quantreef runs this same 9-layer structure, probability and liquidity breakdown across more than 100 coins, and there's a 7-day trial waiting at quantreef.com, and as always, this is for educational purposes only, not financial advice.